What's happening, everyone? This was Sin, and if you guys watched my previous video on scalping, where I put a step-to-step guide on how to get started with scalping, the pros and cons of it, and how it can make you quick money while you're day trading, I received some questions about playing the early gappers, the stocks that gap up a lot in the early days, and kind of the gap and go strategy. So I wanted to just create this video to help all you guys out there that was asking about this or curious about how to play this type of setup. So some of the traders only play this setup. For example, I have a good friend that just scalps these type of early gappers, and he makes like a couple $100s a day every single day. Now he's a little bit more advanced, and he makes like a little bit over $1,000 a day. He has like a success rate of over 90% every single day, and he only plays a strategy. He only trades the first couple hours of the day. So I'll be kind of going over the strategy in this video. So what are early gappers? Let's start with that. Simply put, early gappers are stocks that gapped up a lot pre-market. For it could be any reason, for various reasons usually. Most of the time, I would say 90% of the time is because of some sort of catalyst. So FDA approval, merger acquisitions, there was a really good earnings report, or retailers just think this is a hot stock because it's the holiday seasons. I mean, it could be anything, or like a continuation play from a previous pump. So there's a lot of reason for early gappers, but the goal of early gappers is to take advantage of the quick pump for the quick profits. And this is what I like to scan for early day pre-market. So I do my research every single day, anywhere between 30 minutes to 1 hour before the market opens. And I love to scan for these gappers, these stocks that have gapped up since the previous close by a lot of volume and a lot of percentage. So that's what I look for in early gappers. So let's go over a basic checklist for these early gappers. I like to scan for these gappers pre-market that have at least a 5% or higher gap pre-market compared to the previous close. And I usually look for something between 5 to 35% higher gap compared to the close. I don't like to play the ones that are super high, that are like 100%, 120%. Those are because usually what happens is that it will gap up and then it will just drop immediately as soon as the market opens, and then the bid and ask is just too far apart. So the price just keeps changing rapidly, and that makes me lose my trading edge. So for this specific part, I only like to scan for the ones that are between 5 to 35%. And then the second thing I do is I look for the reason behind the gap up. I want a strong, proven catalyst. That is what I look for. I want one that, for example, like this small company, manufacturing company, just partnered with Apple to be the manufacturer for the upcoming iPhone. Now, when they partner with such a big company and they officially sign the contract, I know that the stock will continue to run throughout the entire day and probably for many, many days, and it will allow me to have the most profit potential. The third thing I do is I love to keep track of the pre-market highs as well as the pre-market lows. So I like to draw a trend line on my charts when I'm looking at this pre-market and identify that gap. And then as soon as the market opens, I like to take a position. I usually don't trade within the first 30 minutes to 1 hour of the day because I like to wait for the trend to prove itself. But I do tend to play one or two of these gappers every single day if I do spot a good characteristics behind the stock, and I feel like taking a good position. And if I do it as soon as the market opens, as soon as that green candle pumps up to where the pre-market high was, then I like to take the position. If it goes the other way, then I want to watch it because it could be a pullback and then a potential pump. But what I ideally want to see is as soon as the market opens, that the first green candle pumps high enough that it goes back up to the pre-market highs, and that means it will go for a continual pump. And what I like to do at that point is I like to do a quick scalp, like maybe 3 to 5 minutes, and then I like to get out of position. And at the same time, I set my loss super tightly, my stop loss super tightly, because I want to be able to minimize my loss. You don't know if it pumps up and then a bunch of shorters kick in and it drops way below at the pre-market lows. So I like to set a very tight stop loss and cut my losses early if it does come down to it. So what do I usually look for in an early gapper like that? I want to look for stocks. I want to scan for stocks that are that has a float of under 20 or 30 million, because that allows the price to change really quickly combined with a high relative volume. And then I like to look for a pre-market volume of at least 150,000 because it shows a continuation push on the gap. I like to look for former runners because history repeats itself, and especially in the stock market, if you're doing all your technical analysis and you're using your indicators, you will realize that a lot of these trends repeat itself. So I like to look anywhere between 5 days or 3 days to around 14 days back to see if it was a previous runner, if it's a continuation play from yesterday, or if it was a supernova before. Again, I look for that powerful catalyst, something that's actually legit and not anything like maybe this thing is going to enter a conference. I only like to scan for stocks that are above $1.50. I don't like to play these penny stocks because I feel like it's a computer trading it. So that's just me. That's optional. You can play however you want depending on your account size. And I like to look for strong previous charts with a previous trend. As I said, history repeats itself. So here's a very simple way of how you can scan for these pre-market gappers. This is using Thinkorswim. All you have to do is go to the scan tab up here, right here. And then what you want to do is, for me, I usually start off by setting the price. So let's see, you can do like last price, minimum of 150, remember, and then let's do maximum of $10 for those people who have a smaller account. Volume, minimum of 150,000 and no maximum. So I want to see a percent change of minimum 3%, but you don't necessarily need to do this because it will populate all the percentage. And then as you can see right here, usually pre-market you won't see too much, but what you can do is that you can filter by net change, and then you see these stocks. Now after you identify one, for example KSHB is the first one, 3% change, you go to charts. What was the ticker? KSHB. So right here you can see this is a massive gap up, and boom, you could have gotten right there for the pump, or you could have gotten at the pullback and you would have still been able to push. So being able to scan for these pre-market and with Thinkorswim is so simple because you got the news tab right here, and it'll tell you exactly why the stock gapped up. So here's an example of a pre-market gap and go type of push pump. As you can tell, CONN is the ticker. This stock at the pre-market highs, here's the gap right here at 2370 was the pre-market highs. As soon as this thing opened, boom, it continued to push upwards. So what I wait for? It opened at roughly, I would say 2330, which isn't 2370. So I wait for this first green candle, pump up. Okay, pump up to 2370, which is the pre-market highs, and this is why I draw out the trend line on when I'm doing my research. And then I ride it all the way to the top, and I exit 2538, and this is a quick pump before the pullback, right? So this is an example of how the stock gapped up. As you can tell, there was pre-market volume. The stock is really active, and as soon as it hit that pre-market highs, just go for the pump. Next one, MTSL. So right here, you see all this pre-market go up and down, up and down. There's a lot of volume going on, a lot of momentum, but the first thing I remember on the checklist was to identify the highs, which was 195. So when the market opened at 161, I didn't get in position yet. I waited to watch either for this green candle to go up here and go for a pullback and then another push. But in this case, there was no pullback. What it did was it continued pushing higher, and as soon as it hit back up to the pre-market highs at 195, I got in positions, and then you sell at 232 for an 11% profit in 1 minute. That's how quick. I only stayed in this trade for 1 minute. Now, last one, let's look at NDRM, which is one that, I love this chart. This chart the entire day all the way up until right here 1946. It's such a smooth chart, double top, pre-market push, everything. This was a runner. This is one of those stocks that would have partnered with Apple, that would have got it soaring upwards and continue on. Now the next day could be just as powerful. But this is an example of a gap. You know, you wait till the 880, as I said, and then you go all the way up to 1096. You can sell right here after the pullback, and then you see the consolidation right here. Very smooth consolidation, healthy volume, healthy buying and selling volume, continues to push on an upward trend, passes all the SMA lines and all the indicators. So this is a really good play to play on, not just for the gap, but even for the midday and push upwards. So there are some gappers that I never play. I don't play the ones, like I said, with massive gaps, so like 100%, 130%. I don't play those. I don't play the ones with no catalyst. You know, if it's just technical breakout, I don't like to risk. I don't like to play the ones where right when the market opens, boom, it drops down 30 cents. You know, I don't like to play those. It just doesn't fit in with my style. And I don't like to play the ones that start to consolidate early market without hitting the pre-market highs or not. And then I also don't like to play the ones that don't have strong enough pre-market volume, because that means there's no continuation throughout the entire day. So thanks for watching. That's just a really quick explanation of how to identify these gap strategies. And I hope this really helped you guys. So subscribe and thumbs up if it helped. For the latest stock updates, you can follow me on Twitter anytime, or just subscribe to my channel, Wilson the Trader, on YouTube. Thanks for watching.